Welcome back to Business Daily here on Trust TV. Now, before the break, I said we'll be talking about the inflation, what has actually happened to us, and its impact on the subnationals. Joining me virtually to discuss this and look at bits and some of our top stories is Adegboyega. He is the lead advisor, an economist, Ametyst Ashlar Advisory, Adegboyega Adebajo. Thank you so much. Good morning. Thank you for joining us on the program this morning.
Morning, Chiamaka. You're welcome. Glad to be around as always.
Okay, so before we get into the conversation on the inflation and its impact on the subnationals, let's take a look at some of the stories that we heard earlier on in the conversation. Now, we're seeing that they're saying that the CBN has said that during the former governor of the central bank, Godwin Emefiele, monies were recirculated, and this is, this is not a good thing. Now, I don't work in the CBN. I don't know how they operate and what this means. Do you have insights into that?
Well, it's not so much about that circulation, but the fact that the previous leadership of the CBN did overuse the ways and means. What that meant at the end of the day was that there was so much naira in circulation, and this was naira not backed by productive means. This is why there's a cap on the extent that the central bank can use ways and means, which is essentially printing the naira. And it's always dangerous to do so in an economy. And that's one of the reasons why there was so much naira chasing after dollars, and the dollar had to be artificially kept at a level where it seemed as if everything was all right. At the same time, that pent-up situation was what led to the sudden rise in inflation, the sharp rise of galloping inflation we had, because once all that was unshackled and the naira was allowed to find its level, so to say, the macroeconomic indicators changed to reflect that amount of naira in circulation. Now, what the central bank has done since the new leadership came in, or the current leadership, I should say, they're not new anymore. They're almost like veterans, because when they came in, there was a battle at hand. And looking back from late 2023 to now, they appear to have won the battles against the exchange rates, volatility, and the galloping inflation, which was bound to happen when they got in. And that's why the central bank has proposed a tight monetary policy ever since it came in.
All right. Now, let's go to one of the things happening, but of course, running up today, I want to believe you're following the climate change situation. This Nigeria-Brazil partnership that has coming to bear, away from the good things that will come in for climate change in the long run, what's the economic impact you're expecting to see here in Nigeria? How can we tap into it and benefit from it economically?
Well, it's interesting you will say that. There are funds out there, and I don't know whether I'm starting at the beginning by saying this. Well, there are funds out there dedicated to green projects. And when you look at the tropics that we sit in as a country, and you look at the vast land we have in Nigeria, as well as opportunities, particularly in terms of renewable energy, you will wonder why we do not have as many green projects as you will find in South Africa and even in Kenya, and also Senegal. So, well, I guess this is bringing attention to the fact that when you budget and you have projects that are green, that help manage the carbon in the atmosphere, there's funding available for those projects. So you do not have to stress your fiscal policy to fund just any project. So start thinking about projects that are relevant to the climate, projects, and such projects are actually also positive to communities. Take, for instance, I mentioned renewable energy earlier. We also have a situation where you could think in terms of reforestation. A lot of the forests have been cut down, and as you cut down those trees, you're decreasing the ability of the atmosphere to naturally deal with the carbon dioxide, carbon monoxide in the air. So reforestation is a big thing, and that's very much possible. But I think the lowest hanging fruit for me when I think of this is the renewable energy opportunities, especially when you look, in spite of what's happening in northern Nigeria, the vast sunshine we have right up to Lagos, the possibilities of land. When you look at the coastal areas, the possibility of using wind. And of course, we need to be very, very careful now with gas flaring. I'm happy if we actively take this up, because it means like that the Dangote refinery, which is pretty new, shouldn't even have started gas flaring in the first instance. But given that it has, it's not too late to start thinking in terms of the methane emissions that are coming out of that refinery, and to look at what we can do to develop the right kind of projects that will attract climate financing.
Okay. All right. Now, let's go to our conversation for today. Inflation rate has dropped. And what does that mean? We'll look at some of the numbers. Now, Nigerian inflation rate, headline inflation rate in October 2025 eased to 16.05%. The last time we had this story, it was about 18%. That was for September. And now we're here at 16%. We're seeing a serious decline in the past 6 months. Now, marking one of the sharpest month-to-month declines in over a year. This confirms a 6-month disinflation streak, signaling a possible structural turning point. Now, the turn carries implications for monetary policy, real household incomes, and borrowing and lending costs. Now, regional cost of living divergence. According to Nairametrics information, Ekiti State recorded the highest state-level inflation rate for October 2025. And of course, we have a couple of those states which we'll be looking at, the ones that are more expensive to live in and more affordable to live in, while Bauchi State recorded the lowest level of inflation rate for the month of October 2025. Now, this divergence indicates that while national inflation is moderating, household realities differ sharply by region, affecting purchasing power, business costs, consumer behavior, state-level poverty trends. In a few minutes, we'll be seeing that picture on our screen showing us the 10 states that are more expensive to live in, and we'll start with the more affordable ones. We see Bauchi is ranking 1 at 10.0%. Gombe is next. Anambra, Bayelsa, Edo, Akwa Ibom, Sokoto, Yobe, Cross River, and Kebbi. These are the first 10 states. Of course, it means really, really affordable to live in Nigeria. While the most expensive states, the 10 most expensive states to live in, we see that Ekiti will be topping that list as one of the most expensive states to live in. That will come up in the course of the program, and we'll look at it. Now, let's go back to the conversation, Ms. Adebajo. Now, how much of this inflation, October inflation drop, can we attribute to food versus non-food categories? Because we keep talking about food inflation being the reason why our headline inflation keeps increasing. This, now that we've come to this drop, what part is mostly food and what part is mostly non-food?
Well, for food inflation particularly dropped to 13% in October from 16% in September. Obviously, it's still hovering around the 12-13 range for November. And perhaps what we need to be mindful of is it's not unusual that as you move towards the festive period, food prices rise. And so the moderation we've seen in August, September, October may not exactly come out in that form as we move closer to December. What we may see is some degree of stability, if anything. That's the rate doesn't move. If it does, plus or minus another maybe 0.5% or 1%, as it were. But food is a key thing. If you look at the states, again, where you listed as easy to live, and you have Gombe topping that with about 10%. Yeah, you may want to look and notice that apart from Cross River, Akwa Ibom, you probably have significant instances of insecurity in a lot of the other states. Farmers are not farming as much as they used to. So what you have really in terms of food prices dropping so low is because there's been a movement in terms of the population. A good number may be in IDPs scattered in various places or totally somewhere else. So you do not have a significant trading activity. And that's the only explanation in my view, because when you then look at the more expensive states for food inflation,
we have that
you will
now
notice that
on the screen, and we're seeing that the cases at
yeah,
20.1. Nasara
yes, that's right.
Ogun
Yeah,
Delta,
so you will notice, yeah, you will notice that these are states. Well, again, apart from Zamfara is a hotbed, so it's possible to then say, yeah, but that's a hotbed, and so why is that happening?
I was going to ask that,
but yes, so but these are factors that's ultimately playing in terms of what trading activities take place, what sort of demands there is about food. Where you have agriculture as a mainstay, it's actually about harvesting and selling wholesale to more retail markets. The persons in those areas who do need retail can access them at a low quality because they're closer to the farms. So the farther you are away from the farming system or main agricultural environments, and that's the logic, the more expensive it is. And this has prevailed over time. So these figures aren't surprising. One thing I have also noticed myself, moving around a few states in the Southwest and also in the North Central area, over the past 3 months, is that establishments that tend to process food, and when I say processed food, I mean restaurants, they have tended to maintain their high prices regardless of the fact that wholesale prices are dropping. And so until and unless that moderates, the man on the street will not feel the impact of these macroeconomic indicators that are showing improvements. So retail prices are yet to reflect the drop we have in wholesale prices. And as to whether this will happen or not, I'm not so certain that the government itself can influence that, because I'm always against interventions in the market directly or price control. So hopefully we will start to see that impact as we move on into next year.
Well, as you've said, it actually gives credence to the saying or the supposed slang out there that in Nigeria, once something goes up, it hardly comes down again. But then if petroleum prices are down, foodstuff is down, why will the restaurateur not do what they can to bring their prices down, to show that things are down? Equally, I want to see from this other point of view, would they keep in having to have this price fluctuations every time something goes up and goes down? Where is the balance in that?
You're actually right, Chiamaka. Your last statement, you can't keep changing prices now and then, on a weekly basis in restaurants. So that's one thing that holds it there. But the next thing is that there is a chain of supply. And so just because wholesale prices have dropped, there tends to be a chain concerning procurement, delivery, purchasing, and these chains have a certain value attached to them. If those values have not changed, maybe because they're offering a greater margin to the people who operate in those chains, to the actors in those chains, then what you have is the prices ultimately at which, or the costs ultimately at which restaurateurs do get their purchases and other food processors remains the same. So it is not likely that we see that drop. And this is not so unusual. It has happened before. We've been here before in previous years where we had the instances of inflation. And what I hope we start to see is that incomes and the marginal propensity to save amongst Nigerian consumers tends to go up. Where there's savings and the sense of an increase in wealth, ultimately people will catch up, particularly when incomes rise and when they rise in real terms. Now that inflation is tempered, let's hope we can see proper increases. And I'm not just talking about the minimum wage, I'm talking about across board for services. Thank you.
All right, now let's look at some of these expensive states to live in. Now, are these states equally, will we call them high growth states, or is inflation actually eroding real economic activity?
Well, I wouldn't quite say that. There is a lot of activity. For what it's worth, I look at Nasarawa. Nasarawa is pretty close to the FCT, and that drives a lot of economic activity in Nasarawa State. Zamfara State for me is an aberration there. And it's one of those places I'm yet to visit. And I say I'm yet to visit because in spite of what happens, I'd like to get a feel of the state itself by being there. You know, it's one thing to read stories in the newspaper. It's another thing to visit. And I've pretty much visited quite a lot of them to actually get the sense of what goes on in there. So with a lot of the other states, whether it's Kaduna, whether it's Kano, whether it's Rivers, you can easily tell that these are high activity states. These are states where trading occurs. Kaduna, in spite of its proximity to unrests, Kaduna itself, maybe the outskirts are a lot more difficult, but Kaduna itself still sees a lot of activity and a lot of engagement in there. So traders, retailers in that environment will feel that, yes, there is a demand, there's consumption, their goods can sell, and they will price accordingly and try to make the margins they need to make. And take a look at your map and you will notice that the Northeast, which is the crux of insecurity, you know, is where you have the lowest levels of inflation. And that's really not a nice thing because it just indicates the level of economic activity there is so low and maybe even, you know, non-existent, as it were.
All right. Now, let's look at some things. How can these states, these expensive states, like we call them, or states with persistent cost of living crisis, how can they improve supply chain efficiency and food distribution? Because, you know, as we always link our inflation to food, apparently, and of course, most households, they have to eat. So how can we actually see that these things are done to help them move better, you know, come out of these situations?
Okay, so here's where, first of all, recall I did say that I would rather that the government does not engage in price control or intervene directly in prices. But, you know, one state is interestingly missing from the list of expensive states or the list of the lowest inflation states, and that's Lagos State. And you may then ask, what exactly is the government in Lagos State doing with the markets? And I say the government here because to answer your question, I believe it is at that level that the government can actually intervene in the markets, ensure that goods are delivered at lowest possible causes. And so what in Lagos State has happened is that there have been these food hubs created. There's an endeavor by the state to ensure that distribution of foods coming into the state are not just located in certain markets, but have a wider reach and accessibility for citizens. So that's sort of, with the distribution costs reduced, the prices tend to be reasonable, especially if you go for wholesale. And you can see that disparity. Lagos State is one of the smallest places, but between a place like Ekpe or Badagry and central Lagos or Ikorodu, there are distinct differences in prices and purchases, which, you know, buyers may want to take advantage of at the end of the day. But this is because the government has intervened in the distribution of it.
So, understanding you correctly, even if the government wouldn't help with prices or try to regulate prices in itself, they could bring about certain policies, certain arrangements that could help see that the prices of things actually do come down and reach the people that it needs to reach. But then there's the issue of the
Exactly.
FCPC, the Federal Consumer Price Protection. What's their role, you know, in this, actually, with the pricing, different prices? You could go to a store now and can find a certain biscuit for 500 naira, and you could just cross over to the next store, just the next one, maybe across the road, and that same biscuit is going for about 200 to 250. There was a time that there's a particular brand of toilet paper that I would use. This paper was being made in Abuja, but the price for that paper in Abuja was more expensive than buying it down east. At a very, you know, the price was different, quite different. Why is that so?
Yeah. Well, again, this goes to the retailers themselves. I dare say that a lot of Nigerian retailers are much more interested in profiteering than in serving their customers, as it were. Yes, there will be cases of profiteering, but if the FCCPC steps in, as long as I can prove that these are the costs and this is my margin, it means I will be able to justify my price. Of course, they're always looking around for people who profiteer unnecessarily. And when they can prove such a case against that person, then they apply the sanctions that they're able to apply according to the law that set them up. But generally speaking, we all see what you've described. Sometimes it's just next door, sometimes it's down the road, sometimes it's round the corner, same product, different prices. But note also that we have them in different environments. And so you can't expect a well built up supermarket with significant overheads to want to sell a product at the same price with the corner store, which is not air conditioned, doesn't really have sales attendants moving around the stalls, isn't interested in helping you find what you want to find on the shelves, just go looking for it yourself. So the cost profile of the business itself will also be an indicator to the price at which it will sell to its customers at the end of the day. I'm glad we have an organization like the FCCPC around, where they do their market studies, they get a sense of what a fair price is. But if they do notice profiteering, I'm pretty sure, and you know, there's just so much they can do themselves. Sometimes we as consumers need to be able to bring this to them, to their notice. This is why they do have a portal through which reports can be made and complaints can be made.
Okay.
So this is, yeah, so that's key.
All right. Now let's talk about, for this states, Nigerian states generally, so far with the cost of living situation that we have found ourselves, which of our states in Nigeria is more prone to business, more attractive for new businesses, for FDIs, name it, for economic injection? Which of our states could we say will be more attractive right now, considering our cost of living?
Okay, so first of all, I wouldn't just want to mention any state, because when we're talking of FDI, it's very important to understand what sector that investment is going to go into. And different states offer different levels of advantages or disadvantage, depending on the sector you want to go to. If we were to talk about tourism, and tourism comes to my mind first because we're almost in December, I'm here in Lagos, and you look around you, you start to hear a little bit of that dirty December phrase, and the preparation for December. Of course, the lessons from last year's holiday period was that a lot of profiteering took place. There are margins to be made, so people need to be fair in terms of how they treat tourists. There are other states in the southwest. If you feel a place like Lagos is going to be noisy, uncoordinated, and perhaps pretty much liable to all sorts of dangers, and that's the feeling with some people, you'll find them taking off to other places in the southwest. Some may drive down to Benin, is barely 3.5 hours away. Relatively quiet, but also is interesting. Abeokuta, Ibadan. So these are places where holiday type arrangements can be made in terms of hotel type or apartment type accommodations, which is a good line of investment. Essentially, it's not just about 1 month in a year. It becomes an asset that can be used throughout the year. That's one thing, but also a lot of areas in the southwest outside Lagos State actually still have some impact in terms of agricultural production. And there's certain crops that are pretty much well farmed in the southwest. So they bring about very, very interesting opportunities for foreign direct investment. In terms of farming and processing, not just exporting raw, but there's the ability to be able to process the harvest prior to exporting. So yeah, I just mentioned two sectors, and mostly in the southwest, agriculture and tourism based on the holiday period. What you have is you need to be mindful of insecurity, as it were. Till date, we still have a situation in the southeast where airlines don't land on Mondays at the airports because you just can't move around on a Monday. That has impacted the southeast significantly. And I dare say in most parts of the north, except in Kano City itself, Kaduna City, you will find that it's a lot more difficult to want to play as a foreign direct investor. And when I say play, take a position in terms of one of the sectors in those areas.
Okay. So we're going to wrap up now and talk about something coming up on Monday and Tuesday of next week, which is the MPC committee meeting. What are your expectations for that November 24th, 25th meeting?
Well, so interestingly, it's the last meeting of the year. None's going to hold in December, and so the next one wouldn't be till another 60 days, so to say, till perhaps the second Tuesday in January. So this is actually a very, very interesting meeting because it more or less sums up what the year has been like from a monetary policy perspective. But something happened which I had, projected that the last meeting will be a hold on the rates. I should say that. And what happened was that the MPC actually cut the rates, and all. But even then, given where we are, one expects another rate cut. And the reasons are pretty clear. Inflation has been trending down. It's gone in the direction the CBN has wanted it to go, given its tight monetary policy position. The macro fundamentals are responding positively to monetary policy. There's really no reason why, otherwise there shouldn't be a cut. There's also, interestingly, when you look at some economies, not just in Africa, but you'll find, particularly in Africa, Ghana, Kenya, Egypt have all lowered interest rates of recent. And this reflects the global perception of what's happening with money. And so the policy space actually now exists and allows that. We don't expect some kind of volatility with the interest rates, even though we know that come December, we have a situation where some foreign exchange comes in.
Okay.
So ideally, we see a situation, and my research team, we expect a rate cut somewhere between 50 to 100 basis points.
Okay.
But that's not all. The cash reserve ratio was reduced to 45%, and the asymmetric corridor plus 250 minus 250 basis points. The expectation here is that it might be reduced further. And the reason for that is it shows the hand and a deliberate easing off on monetary policy. With the high cash reserve ratio, banks were not really able to lend and create private sector credit.
Okay.
Perhaps it's time to start doing that so that we can have an uptick in activity in that sector.
All right. Thank you so much, Mr. Adebajo. We need to actually leave. The news is coming up in a few minutes. Thank you for your insights on our conversation this morning.
You're welcome. Thank you so much. You're welcome.
And that's what much we have for you on our program this morning. For more of our news programs and documentaries, do well to follow us on our social media platforms and on our YouTube live stream. Same time, same place next time. Bye for now.